In this video, I've got the latest housing market updates. We've got shockingly high inflation, soaring rental prices, and a massive shift in lumber prices once again this week. We've also been seeing a massive change in the number of people on mortgage forbearance. And there are so many more updates in this video, it's packed full, so make sure to stick around. Also, let me know down in the comments if this information is helpful and if there's any other information you'd like me to cover every week. So let's get right into inflation. Last week, the Consumer Price Index, which is one of the main benchmarks for inflation, rose at the fastest pace since August of 2008 at 5.4% compared to the expected 4.9% for year-over-year inflation. Also increasing by 0.9% month over month compared to the expected 0.5%. Inflation has been escalating for a number of reasons, including supply chain issues, extremely high demand as the economy starts opening back up, and year-over-year comparisons to when the economy was nearly halted by the pandemic last year. Much of the pressure on prices have come from sectors that were most affected by the shutdowns. For example, used car prices last month rose by 10.5%. This accounted for nearly a third of the index's gain. Used car prices over the last 12 months have risen by 45%. And that's been a major stress in the consumer pricing for used cars. And there is also belief that inflation could be sticking around for quite some time. This has to do a lot with the rising housing and shelter prices. The CPI includes shelter as nearly 1/3 of the index, and that alone increased by 0.5% for the month and 2.6% over the last year. So between used car and housing prices increasing so dramatically, this could be a bad sign for inflation for the near term. And last week we did hear from Jerome Powell, who is the Fed chair. He touched on housing prices. He mentioned even with interest rates starting to rise in the near future, housing prices will continue to rise because of demand. And he doesn't think housing prices are going to come down at all even with rising interest rates. As I've mentioned in many of my videos, rising interest rates will likely cause the market to start slowing down, but we're not going to see a 180-degree turn in prices where they'd be falling. He also mentioned that housing prices are rising from demand, not from irresponsible lending that led to the housing bubble of 2008. And he did also talk about how it is concerning that first-time homebuyers aren't able to buy a home as easily as before. And he reiterated that the reason that housing prices are continuing to soar are from high demand and low supply rather than low interest rates, and that more housing supply would definitely help with reducing inflation. And lastly, rising rental prices do contribute to inflation, and rental prices are mainly calculated by housing prices. So basically what we heard from JPOW is that housing prices are a concern, but the prices aren't being inflated by anything that the Fed is doing.
Meanwhile,
next up, cash buyers. A new analysis of city records nationwide showed that 30% of buyers in the first 4 months of 2021 were all cash buyers. This is up from 25.3% a year ago, so it's a pretty significant increase. And if you've been trying to buy a home in 2020 or 2021, I'm sure you felt this as well. This is the largest share of cash buyers nationwide since 2014, when cash buyers accounted for 43% of buyers. So there are a lot of people out there paying cash for homes, which is also making it much tougher for first-time home buyers to get into a home. Because at the end of the day, cash is king in real estate. Now let's move on to mortgage and refinance demand for the week. As I mentioned in last week's video, interest rates dropped unexpectedly. This led to applications to refinance a home to increase by 20% over the week prior. Refinance demand is very sensitive to daily and weekly interest rate changes. Interest rates last week dropping was unexpected because with the economy opening back up, it was more expected that they would start creeping up. But I think with the Fed confirming that even after high inflation numbers, they weren't going to change interest rates anytime in the near future. I think that's led to mortgage rates starting to settle down and kind of decline a little bit this year. And while refinance demand increased last week, they're still 29% lower than they were a year ago when interest rates were tumbling. And mortgage applications to purchase prices has increased by 8% last week. This was also 29% lower than the year prior. We've also seen the average loan size decrease to its lowest level this year since January. And moving on, we've also seen mortgage credit availability decrease in June according to the MCAI. And this is coming from a report from the Mortgage Bankers Association. The MCAI fell by 8.5% to 118.8 in June. This decline indicates that lending standards are tightening up and getting tougher to get a mortgage. And this came as a result from the GSE policy change. This reduced the availability of high loan-to-value refinance loans. Now let's move on to mortgage interest rates. Mortgage interest rates again tipped down last week. They dropped from 2.9% to 2.88%, so only a 0.02% drop, but still a decline. They started rising early on in the week, but closed out the week slightly down from the week prior. Interest rates have now hit a new 5-month low going back to February of this year. These drops are attributed from Jerome Powell last week stating that any action from the Fed to increase interest rates is still a ways off. Interest rates are expected to stay low until there's any indication from the Fed that they'll start increasing them. And they have stated in the past that they would give plenty of notice when they do start increasing interest rates. Fannie Mae and Freddie Mac also announced that they would be dropping the adverse market refinance fee for loans that are delivered after August 1st, 2021. This was a fee that was added to refinances during the pandemic. They were charging all lenders a 50 basis point fee for all loans delivered to them. The fee ended up increasing interest rates by about 0.125% to consumers, and this was designed to cover losses that were projected from the pandemic. The removal of this fee is great for borrowers as they were the ones paying for this fee, so this will save them about 0.125% on their loan, which saving money is always great for the end consumer. Now let's talk forbearance. The number of borrowers in forbearance has decreased to 3.5%. This is down from 3.76% 2 weeks prior, and this means that there are now only 1.86 million people in forbearance, which is down from just over 2 million that we saw 2 weeks ago. And this is also down from over 7 million that we saw at the peak of the crisis. So this is a very good trend for hopefully the housing market getting back to normal. Now let's talk lumber prices. Lumber prices have hit another incredible low, hitting just under $575 per thousand board foot. This number is down $180 from the week prior when they were closing out the week at $755. And we haven't seen lumber prices this low since November 11th of 2020. So this is certainly a welcome trend. We are getting much closer to pre-pandemic lumber prices where we saw prices in the mid 300s. The question is going to be, what is the new baseline for lumber prices going to be over the next few years? Will lumber prices go below 500 and will they stay below 500? Or are lumber prices going to stay very volatile over the next year or two as supply continues to ramp up? I'll certainly be keeping an eye on these numbers, as this can have a huge impact on new construction homes. And the housing market is in dire need of new construction homes more than ever before. And so finally, let's talk about the rental market. We're seeing rental prices increasing at incredible levels. A lot of this has to do with the rental market just catching up to the rising housing prices. Housing prices have hit record levels, and now it looks like rental prices are also going to hit record levels. During the first part of the pandemic, March, April, and May, we saw rental prices drop off a cliff. There were multiple reasons for this, and there were different reasons for each city. For example, Boston saw a massive decline in renters because a lot of the renters are college students or young professionals. And with everything going remote, they were able to work from home, go to school from home, and live anywhere that they wanted. So many of them went back home with their parents outside of the city. A lot of this was also from a lot of fear coming from people being in crowded areas. So the city was one of the last places they wanted to be. We saw the average rental price across the country decrease by 4% of its projected level. However, now that the economy is opening back up, we're seeing rental prices hit new levels. In many markets, rental prices have gone back to where they were pre-pandemic or above. So rental prices have seen a significant rebound. From the beginning of 2021, rental prices in most markets have been increasing incredibly fast. In fact, rental prices on average are now 2% higher than their projected level for 2021 had 2020 been a normal year. And while many cities have seen a full rebound, there are still cities seeing pandemic level prices. For example, San Francisco and New York City's prices are still down by about 10% from their normal levels, though they have been seeing a steady increase increase this year. Overall, we've seen a lot of people moving outside of big cities and going to more affordable areas. Whether it's to rent or buy a home, there has been a huge shift over the last year. In fact, we've seen a 36% increase in rental prices in Boise, Idaho just in the last year, and a 22% increase in Riverside, California. And a lot of locals are very concerned about this trend as they are getting outpriced in their own neighborhoods. This is because people that are moving from larger cities are used to paying high amounts in rent, so going out to rural areas, they're still paying way less than they would be in these bigger cities and getting way more for their money. Overall, the rental market supply is tightening up and prices are continuing to rise, and rents are increasing at staggering paces. And as long as housing prices continue to surge, it'll be expected that rental prices will as well. So those are my updates for this week. Make sure to check back next Monday for my weekly housing update video. Thanks for watching.